Right now, one single stock is holding up the entire stock market. If it falls, your portfolio could be next. That stock is NVIDIA, and Wall Street doesn't want you to know just how dangerous this really is. But this has happened before, and it led to the deepest and longest bear market in Wall Street history. Today I'm going to show you what to expect, how to prepare, and even how to profit as this all plays out. Now, NVIDIA just posted record-breaking numbers, $46 billion in quarterly revenue, with guidance for even more next quarter. They have become the heartbeat of artificial intelligence, powering data centers, cloud computing, and even next-gen robotics. Their new Jetson Thor chip is poised to fuel automation and self-driving cars, and Wall Street is bullish. Analysts are hiking price targets to 200, 225, even higher. They don't think the AI boom is over. In fact, according to them, NVIDIA is just getting started. But here's the problem. NVIDIA is now worth over $4 trillion. It makes up more than 7% of the S&P 500. That means when NVIDIA sneezes, the entire market catches a cold. If AI spending slows even a little, if U.S.-China tensions escalate, or if margins compress, the fallout could drag the whole stock market down. One company should not have this much power, but right now, NVIDIA does. So let's imagine this. If NVIDIA fell just 20%, the NASDAQ and S&P could lose more than $1 trillion in value almost overnight. Meaning even if you don't own a single share of NVIDIA, your retirement accounts, your ETFs, your tech darlings, they'd all feel it. That's the danger of having one stock carry the market. NVIDIA is both the biggest opportunity and the biggest risk in the market today. On one hand, it is leading the AI revolution and expanding into robotics, automation, and beyond. On the other hand, its dominance makes the entire stock market fragile. So yes, be excited about NVIDIA, but also prepare for what happens when this giant stumbles. And the best way to do that is to look at history. What happened the last time we had a situation like this? Well, there is precedent. In fact, what is happening today is nearly identical to the dot-com bubble of the late 1990s. The internet was just coming about. Tech stocks were booming. The NASDAQ index soared 542% in just 5 years. And the leader of that rally was Cisco. Cisco was the NVIDIA of the 1990s. Triple-digit earnings growth quarter over quarter. Revenue went from $69 million in 1990 to $18.9 billion by the year 2020, an increase of 27,000%. The stock move was even bigger, a 103,000% gain in a decade. Investors had never seen anything like it. Analysts raised their price targets so many times, they eventually just gave up. Here is a chart of Cisco during the 1990s. Now, it looks like it was just kind of inching along and then went parabolic over the last 2 years, but that's not the case. This is why it is so important to look at long-term charts in logarithmic scales. Let's change that. And when we do, you can see a pretty steady rise over the entire decade. Now, let's compare that to NVIDIA today. Again, we want to put the chart in logarithmic scale. And when we do, it's a pretty similar picture. NVIDIA is up 37,000% this decade. Sure, not quite as big as Cisco's 100,000% run, but you have to remember that companies went public much earlier back then. Thanks to the Sarbanes-Oxley Act, which passed in 2002 after the tech bubble exploded, it is now very expensive to be a public company, thanks to these extensive reporting requirements. So NVIDIA was much larger when its growth phase began. Another way to compare these two is to look at how much of the market they represent. At its peak in March 2000, Cisco was worth $500 billion, an unfathomable number at the time. The S&P 500, meaning the total value of the 500 largest companies, was $12.3 trillion, meaning Cisco represented 4% of the index at its peak. Today, NVIDIA is worth a whopping $4.4 trillion in an S&P valued at $58 trillion. NVIDIA represents a massive 7.6% of the index, nearly double Cisco's weight at its peak. By nearly every metric, NVIDIA is following the Cisco playbook to a T. Back then, it was the internet revolution. And listen, investors were right. It changed everything about our day-to-day lives. But as is always the case, stocks went too far too fast. Optimism turned to euphoria. Wall Street priced in perfection. Valuations got out of hand. A bubble formed, which eventually popped. And chaos ensued. The S&P 500 index fell 50% in 2.5 years when these dot-com darlings came crashing down. The tech-heavy NASDAQ composite fell 78%, and it didn't make new highs for 16 years. Are we going to experience the same fate? Yeah, probably. But that doesn't mean you need to suffer through the eventual crash. Only an idiot would ride the index down 78%. And sure, it took a while for the tech sector to recover, but other areas picked up the slack. Your job as an investor is to allocate your capital to the places with the greatest chance of growing your money. And to me, that does not involve buying $4.4 trillion companies at the top of a 37,000% rise, trading at 50 times earnings with 90% profit margins. That growth will slow. Competition will drive margins down, and when it does, NVIDIA will fall 50 to 80% like every other leading stock has in history. I won't be there for it. I'll be doing what smart investors did after the dot-com bubble, moving money to better opportunities. This is a sector performance chart showing which areas performed best over the last 25 years. In 2000, tech was imploding, but utilities were surging, 57% in a year. Healthcare and financials also had banner years. In 2003, it was IT and basic materials. The shale boom delivered huge gains in the energy sector from 2004 through 2007. Investors tripled their money on that move. Real estate, banking, consumer discretionary, they all had their day. Look at 2022. Even in the middle of the worst bear market in 14 years, the energy sector climbed 65%. And this is just looking at U.S. stocks. There are other asset classes as well. REITs, gold, bonds, emerging markets. There's always a bull market somewhere. Now listen, I am going to ride the AI wave as long as it lasts. And sure, I will take a small hit when the party finally comes to an end, just like everyone else. But I will continue to allocate to the areas showing the greatest strength, and I encourage you to do the same. Who knows what that will be in the coming years? Perhaps a shift toward nuclear power will send those stocks on a multi-year run. Maybe inflation will ramp back up when the government refuses to cut spending, and we'll see another boom in commodities like we got in 2020. We could see a boom in manufacturing stocks thanks to trillions of dollars being invested from overseas, or a housing boom due to declining interest rates. Just follow the money. Keep an eye out for areas that are outperforming, because that is where the Wall Street heavyweights are placing their bets. But I'm curious what you think. Do you believe NVIDIA is unstoppable? Or are we one bad quarter away from market crash? Drop your thoughts in the comments. I will do my best to respond to each and every one of them. And listen, do not forget to subscribe. Hit that button in the corner, because I'll be covering both sides of this story, the opportunities and the risks, every step of the way.